Well, good morning, traders and investors. My name is Roger Scott, and today is Friday. It's the second week, it's the end of the second trading week of 2021. I'm looking at the market about an hour and 15 minutes or so before the opening bell. We've got some major reports coming out today, and the markets are lower, as you could see here, which is kind of surprising in light of what President-elect Biden announced yesterday. So I want to talk to you about that. But the biggest reason the markets are down is because of yesterday's jobless claims report. The jobless claims report was at 965,000, substantially higher than the expectations. And this is a report based on last week's data. So this is a very live report, and it's telling us that unemployment is moving higher. And if that's the case, that means COVID is having a major impact on the economy, which is really bad because we know that healthy people are not going to get vaccines for another few months for the most part, and that's causing a big issue right now. In 6, 7, 8 months down the road, it's not going to be as big of an issue, but right now it is. So today we're expecting retail sales, consumer sentiment, and a few other reports like industrial production, but I'm going to tell you straight up, I'm a straight shooter. You guys know that. The retail sales report is going to be very instrumental. If the retail sales report is bad, it'll confirm the jobless claims report, and that'll probably cause more sag on the stock market. If the retail sales report is positive, and I don't think it's going to be positive, because it looked like retail sales peaked out around October, maybe early November, and then started going down, and we never got that end of year retail rally because the numbers were bad. So it's going to be very, very interesting to see how this retail sales report does. But my feeling is, based on yesterday's jobless claims, that it's going to do bad. And if the retail sales report is doing bad, then the consumer sentiment is not going to do that well either. Industrial production, I think, is starting to ramp up, but that's a whole different indicator. Right now, I'm really focused on the consumer sentiment, retail. Why am I so focused on them instead of industrial production? Because consumers make up 70 to 80% of the GDP, all the growth that we have in this country. So the reason the market is down, we do have really good news from Biden, but we've got really bad news from the jobless claims. And this is telling us that we may be in a very similar situation that we were in last March, April, and May. So again, I hate to say I told you so, but boy, oh boy, I've been telling you this for a long time. So let's look at the news, and then we'll talk about some other factors that you may be interested in seeing as far as the market this week. And I'm going to keep it pretty quick this week because it's Friday. You guys have more important things to do than stick around and watch me do my analysis every day, right? It's Friday after all. Spend time with your family, go out, have fun. Well, wait a minute, COVID. See, I'm getting carried away to my own detriment. All right, so Friday's this is what I'm talking about. Friday, global shares fell Friday after worse than expected jobs report. That's what I was just talking about, the one that was almost at 1 million, and a late slide in several big tech stocks. Another vulnerable area right there. U.S. futures lost ground after Joe Biden announced his plans to propose $1.9 billion package to help along a recovery from the pandemic. You would think the market would be really bullish after that, right? Nope. Biden spoke about the plan after Thursday's closing, but we've had a whole overnight, and look at that. Dow, NASDAQ, S&P, heck, even the Russell. Look at that. So let's go back to our report. Biden's plan includes $1,400 check for individuals on top of the $600 provided in the last bill. That'll help. The plan would also extend temporary boosts in unemployment benefits, and that's where the money is right now, literally. And moratorium on evictions. Ouch. Ouch. If you're a landlord, ouch. And foreclosures, well, that'll help through September. I hope that helps. I really do. It also provides funds for a mass vaccination campaign and a major expansion of local public health efforts. Remember I told you that a lot of Biden's money is going to go into healthcare? Remember I told you when COVID was getting started, I said a lot of government money is going to be going into public health, which means healthcare stocks are going to be going higher. And guess what stocks I'm going to be talking about today? Healthcare stocks. You guessed it. Investors are hoping that more powerful stimulus can tide the economy over until COVID vaccines get daily life back to normal and trigger a powerful recovery later this year. Because what we're seeing right now, the fear of COVID and the impact it's having on the economy is overriding the strength of this $1.9 trillion package. I think I've said it as eloquently as I'm going to say it. So keep that in mind. And that means we're in a danger zone right now. The gloomy start for Friday, today, came with global death toll brink surpassing 2 million. That's why the markets are not doing well. And again, Trump decided to blacklist several Chinese companies. Xiaomi, I can't pronounce these stocks. Sinuk, third largest national oil company, aerospace companies, latest to be blacklisted from U.S. markets for alleged military links. And the fact is, I wouldn't put too much focus on this because this is Trump's last week in office. So, I mean, and I don't think, and Biden says he's going to be tough on China. I think he's lying. I mean, I'll be honest with you. I just don't see it. Maybe he will be. I don't think so. I think it's just posturing. Retreat in the market, the one that I'm showing you right here. I'm trying to kind of connect all the dots for you guys. So sorry I'm going back and forth, but there's a story here. The stock market retreat followed the discouraging report that showed how much damage the economy is taking as the pandemic worsened. That's how I started all this. Last week, 965,000 more workers filed for unemployment benefit as businesses shutter and lay off employees. That's up sharply from prior week, 784. That's what, let me show you the number, the difference in the number. And it's kind of good for you kind of see me putting all of these parts together for you. Look at that, 784, 965, 181,000 spike. It's terrible, terrible, terrible. Smaller companies jumped. Remember, the Russell is leading, and it's going to continue leading, as they often do when investors are upgrading their expectations for the economy. And the yield on Treasury bond was 1.11% early, Friday down from 1.13. Again, I believe the bond market, let me show you what I believe is going to happen with the bond market. I believe the bond market is going to come back into its trading range or kind of sit around here. I don't think it's going to really go down because there's really no expectation for interest rates to go up right now, especially with Biden. I mean, doing this, let me show you what, based on the claims that he's making that moratorium on evictions, foreclosures through September. That is not a period where interest rates are going to go higher. And we already know the Fed said we're not going to raise rates for a while. So I'm not expecting huge slides in the bond market. Because remember, the bond market is inverse with the stock. It's inverse with interest rates. So the only reason why bonds would go lower if interest rates started moving higher. And with the amount of aid coming into the country, it would kind of be defeating to give 1.x amount of trillion in aid and then increase rates. That wouldn't really work together. So I think we're going to see the bonds kind of stick around this level or go back into their trading range. I don't believe this breakdown is substantial, and I don't think this breakdown is going to be impactful, especially with the stock market cooling off right now. Because remember, if stocks go down a lot, bonds go up. All right? Because if stocks go higher, right, that means interest rates tend to cool off. Again, the big reports for today, and this is going to solidify or not, but if retail sales is weak, it's going to tell us that the jobless claims are already having an impact on the sales, and that's a two-strike. So again, I'm very wary of the stock market right now because it's very vulnerable because we've had like the best news ever, and stocks can't get it together. And as I explained to you, that has a lot to do with technical levels, especially in the NASDAQ 100, which is grossly overbought, as I will show you right now, based on the momentum level. Look at this. This is the number of stocks trading above the 200-day moving average. Look at that. I'm going to go to max. Look at that. Highest level in 11 years. So so to summarize, we've had like the best news ever in terms of money coming into the market, people getting checks, and what does the stock market do? Barely moves. As a matter of fact, it's negative. I mean, look at the Dow. It's down 150 points. The employment data was horrible yesterday. The retail data will probably confirm that today. I hope it won't, but it probably will. And large caps, especially technology large caps, are on the sidelines because they are way overbought. And usually, those are the first stocks to break down when Democrats take office because they're going to be potentially breaking those companies or taxing them more. Democrats don't like large cap techs. It's not a favorite. They do like small stocks, which is why the Russell has been going up. But remember what the report said today. A lot of this money, 1.7 or 1.8 or 1.9 trillion dollars, I don't even remember anymore. It's a huge amount of money. It's going into healthcare, and healthcare. So I got 2 healthcare stocks for you today. And I told you these stocks are probably going to continue going up. I got a small cap, a Russell, and a large cap. So let's start with the small stock. This is a Russell stock, Tenet Healthcare. The stock is near swing highs, as you can see here, multi-year high right there. The stock is breaking out. I would be buying it around the 48.50 level, and I would put a stop loss around the 43 level on this stock. Very good buying opportunity in this stock. I like it right above this high. It's showing very little corrective pressure. The stock is doing well. And the next one, folks, I've been talking about this stock for the last year. When I was talking about this stock, it was trading around here, around 270, and it's doubled now in price. This technology is this replaces traditional braces, Invisaligns. Nobody else is doing it. This is a large cap stock. So Align is the large cap stock, ticker symbol ALGN, and then we have Tenet Healthcare. Tenet Healthcare, what do? Multinational investor-owned healthcare services. Healthcare, 1-year return, 27% return, 3-year return, 171% return. Surgical hospitals, folks, healthcare, and more healthcare. Russell 2000 stock, THC ticker symbol. And next one, Align, ALGN, Invisaligns. Nobody has what they are doing right now. Global device industry, tech innovations, Invisalign. Look at this, 1-year return, 92%. And I think the stock is going to be going higher. Ticker symbol ALGN. Before you go anywhere to enjoy your weekend or do whatever it is you do, and keep your eye on the retail sales data. It's coming out in a few minutes. I want you to pay attention to this. Got something really important for you. Folks, I'm willing to bet most of you don't know this. But thanks to a phenomenon called January effect, a select number of stocks have the potential to skyrocket higher than they usually do over the next few weeks. Traders who know what these stocks are can expect huge returns in no time flat. And that's why I want you to watch this presentation now before it's offline. In it, you'll discover which companies just popped onto the stock market experts Adam Sarhan's radar. And folks, Adam is hot. This is a Forbes contributor. He's on CNBC all the time. This guy is in the know. And why it could explode higher in record time. Listen to Adam Sarhan. When he's got something on his radar, pros come and listen to him. This guy trades for Stanley Druckenmiller's family, okay? I mean, this guy is hot. You got to click on the link below to see why you'll want to get in on Adam's next trade today. Again, January effect, huge returns expected. Stocks that are popping on his radar now, do not miss out. Follow the link below and learn all about Adam Sarhan and what he's got in store for you. You're going to love it. And send me some feedback. Post some comments here. Talk to you guys later and have a great weekend. Bye, everyone.